IFRS 16 requires lessors and lessees to make a number of disclosures related to any leases that they have, in addition to any information that they have in their statement of financial position and their income statement. So I just want to give you a few examples of some of the things. Like for lessors, you see the carrying value of the lease receivable, any selling profit that they're recognizing on the lease, if this is a sales type lease, if the lessor is a manufacturer or dealer, any interest revenue that they have. For the lessees, you'd see the discount rate that they're using to compute the lease liability, the weighted average lease term, a maturity analysis of the finance leases for the next 5 years. So basically, okay, how much of the lease payments are going to be due 1 year from now, 5 years from now, and so forth. Okay, so let me give you an actual example. We'll walk through for Carrefour, the retailer. Take a look at, so this is an excerpt right here from Carrefour's statement of financial position from their liability and equity section. And you'll see here, if we were to just look at their financial statement, just their statement of financial position, we'd see lease commitments, portion that's less than 1 year. So this is the current portion of that lease liability, 936 million euros, and then 3.7 billion euros in terms of non-current portion of lease liability. So this plus this is the total lease liability, which is 4.723 billion euros. Now, leave all this aside. So that's, I've shown you before, financial statement presentation. I want to get to this here. This is a supplemental disclosure in the notes to Carrefour's financial statements that shows lease commitments by maturity date. So remember I said with the disclosures in the next 5 years when the payments are coming due? So they break out this 4.723 billion, which is just this, plus this, the current and non-current portion of their lease liability. So this is their total lease liability, 4.723 billion euros. And they're saying, look, as of this date, 936 million euros is due within 1 year. Okay, these are payments that are coming due within 1 year. Now, there's some that are coming not within 1 year, but between 1 and 2 years. Okay, so 873 million, 2 to 5 years, this amount 1.816 billion. Okay, and then beyond 5 years. So you can see here 4.723 billion in total lease commitments, but this is nice. This is a nice disclosure. You could say, okay, this amount is coming due within 1 year, then the year after that, then the few years after that, and then this is long-term, beyond 5 years. Okay, so this is the type of disclosure that you would see. This isn't going to show up in the statement of financial position. You just get the current and the non-current portion, the lease liability. And they also disclosed, Carrefour said what their incremental borrowing rate was in terms of discounting to calculate the lease liability with the present value calculations. Now remember, the lessee will use the lessor's implicit interest rate when doing the present value calculations, unless the lessee does not know the lessor's implicit interest rate, in which case the lessee would use their own incremental borrowing rate. And they've said, okay, the weighted average incremental borrowing rate that we used for discounting, 4.58%. So that showed up in the disclosures, not in the financial statement. It was in the notes to the financial statements. Now, we got, again, the statement of financial position, same company, Carrefour. This is the asset side. Okay, the asset side, we've got right-of-use assets because Carrefour is a lessee. Okay, so I showed you their lease liability. Now here's the right-of-use assets. You see 4.506 billion euros as of December 31, 2020. Now, we go to the notes that are in addition to the financial statements, and we could see a further breakdown of that 4.5 billion euros. Okay, now we see, okay, well, 4.3 billion of that had to do with them renting land and buildings. So it's breaking out their right-of-use assets and say, what is it that they're actually renting here, that Carrefour is renting? So land and buildings, 4.3 billion. Equipment and fixtures and fittings, maybe this is fixtures in their store, something like that, 122 million euros. And then investment property is the smallest amount, 63 million. And they break it out. They not only show you the carrying amount. Okay, this is the amount right here that's going to show up on their statement of financial position. This is the total of all three of these. They show you the gross amount here. You get the gross amount minus the depreciation. So they break out the depreciation separately. So then now you know the depreciation, right? Because the lessee is going to incur depreciation expense for a capitalized lease, but also interest expense. Now, I showed you in a previous video, interest expense showed up in their income statement. And here, although Carrefour didn't lay out specifically what their depreciation expense was related to its leases in its income statement, you could see right here, they specify even for each type of thing that they're leasing, they say, okay, this is the amount of depreciation that we've had for that type of right-of-use asset.